Morning, Steve Free in Chicago with the morning grain comments. Well, we've seen the second day in a row of liquidation of long positions because of an overbought situation. Some people link that to improving South American weather. I think that we were due for a correction, and the numbers really haven't changed. You know, bean exports, bean crush is not being rationing. We're looking for a lower U.S. carryout, and whatever the South American crops are, they probably won't get any worse, but they still are lower than what the USDA said in their last estimate. Over the corn market, we're the cheapest corn in the world. We expect continued buying and record exports between now and through May, which will bring our carryouts down to a situation where I think in both corn and beans, we'll test the recent highs from last week, and we'll actually trade above that. Some of the support levels, 20-day moving average in March beans is 1337, March meal 435. I doubt if we trade below $5 corn. I think that we'll be in a $5 to $6 range in corn. I think that the wheat market has some positive things going on with export taxes in Russia and possible reduced Black Sea and Europe exports supplies, which might shift some demand to other origins. We filled the gap in the corn, and as far as support in the nearby wheat, 643. So again, probably wheat's in a $6 to $7 range. I think that shifting maybe from a weather market in South America to a demand market is harder to trade. More volatility is expected. We get weekly export inspections, export sales, daily flashes, but not the day-to-day, even every 6 hours weather forecast that tends to fuel a rally if some place is dry. We also have to wait monthly for USDA supply and demand numbers, and probably won't make any major changes until March, when they get an idea of South American supplies, China demand, anything that the new administration might do as far as trade relations are concerned, and just kind of taking a peek at the early U.S. spring weather forecast with dryness across most of the Midwest and Southern Plains as we get into the 2021 season. We'll be also watching Northern Hemisphere weather, especially in Russia, to see what impact their weather will have on their export supplies. So we're shifting from a day-to-day, maybe every 6 hour, putting information into the markets on the upside. We're going to more of a demand market, which is harder to trade every day. And we look for increased volatility as the numbers still suggest we need to trade back at least to last week's highs and maybe above. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.